I'm David Bank. I run ImpactAlpha. We're a daily newsletter and media resource for impact investing. Anna mentioned that she likes to spar with Imogen. I also like to spar with Imogen. We have a podcast where we go at it. And I wanted to thank her and also Governor Patrick. His journey in particular, spanning public and private sector, is kind of a good segue, sets us up for this panel, which is about the intersection of activism or movement building, mobilization, and this world of private investment that we've been talking about today. I had counted on the governor, or at least Imogen, to raise what I think is sort of the elephant in the room today. And I didn't want to be the first person to mention the name of he who shall not be named. But I will say that while we're here talking about mobilizing millions and billions, down in Washington they're talking about trillions, and this tax plan is going to affect everything that we're all talking about today. And I don't think it's kind of avoidable to talk about private investment now without talking about what's going on in Washington. So I know we all in a time of hashtag Me Too, or We're Still In, or Black Lives Matter, and for that matter, complicit, which came up earlier in the day. We all come at it from our own perspectives, and I wanted to make this sort of personal so that these folks can be personal, and that sort of maybe opens up the discussion a little bit. So the first question was about, is there a moment or a epiphany or an insight in this current context, and you can take the current context in whatever fashion you like, that sort of has informed how you yourself, not just your organization, but how you yourself sort of situate yourself in this crazy world we're in. Fran, you had a good one in our conversation, so let me turn to you.
Great, thank you. Hi, I'm Fran Seegull, Executive Director of the U.S. Impact Investing Alliance, which is being incubated by Ford Foundation. It's a field-building organization. My first day on the job was October 31st, 2016. And I was active as a private citizen in the presidential election. Nancy Fund and I actually wrote a piece for ImpactAlpha, an open letter to the presidential candidates on the eve of the first presidential debate. In any case, I took this job and I landed in New York October 31st, and my second week, the presidential election happened. And I had planned a trip to Washington the next morning, the 7 a.m. Acela down to DC, thinking that, with meetings with the White House Office of Social Innovation and USAID and OPIC and others, thinking, well, I'm going to get out of the starting blocks really quickly. And so it was a long night, election night, didn't get too much sleep, headed over to Penn Station, and I was sitting in the quiet car, but I have got to tell you, the entire Acela train was the quiet car that day. No one was talking to anyone. And it might have been the 7 a.m. hour, but I was kind of sitting, looking forward. I wasn't looking down at my phone, as some of you are right now. We're used to constant stimulus, and I was just sort of staring straight ahead. And in a very film noirish moment, I looked out of the train car and saw Terry Ludwig, who's a personal friend and a colleague in the space. She's the president of Enterprise. And she and I, typically get along really well, and we both, laugh and smile and engage. And we both kind of look at each other poker face. She texted me and said, once we get out of Penn Station, let's meet between the cars, which is where all good business gets done in the northeastern corridor, as you know, from Boston to Washington. That's where all deals get done, spotty cell phone coverage. In any case, we met. And we made a pact to each other that this was a time to lead. And I got to the White House Office of Social Innovation, and folks were outside, smoking, if you can believe it, mascara running. David Wilkinson, some of you know, he's like delightfully disheveled. In a normal setting, was just like tie was askew, very moist, We had a lunch at the Navy Mess, which is in the West Wing, and it was just a really tough day for everyone. And on the way back on the Acela, I said to myself, this is not only a time to lead, but the work that we do as impact investors is more important now than ever, and that it was very important for my personal and professional preservation to focus on where we could come together. And I believe then, and I have evidence now, 1 year hence, and I can talk about it later, that impact investing is something that has appeal to members of Congress, to select Trump appointees, really across the political spectrum. And so that's my personal tale.
Anybody, whichever, we didn't have an order to this, so is there?
You go. Okay, now I'm on the spot. Can you hear me? Okay,
yeah.
Fantastic. So I guess, so I've never worked in an impact fund. I actually worked at Carlyle and I worked at Matrix, and they can be considered the bastion of capitalism. But what I found very funny was when I went to school at Harvard, there was this clear distinction. You can do good or you can make money, and never the twain shall meet. And to me, that seemed extraordinarily counterintuitive, because I was brought up to believe that businessman was essentially the trustee and steward of public good. And you can't be a bank robber and then turn around and give 2% of your proceeds for charity and somehow wipe away all the public bad that you're doing. So in my view, all investments should be impact investments. And I think that's how I've always proceeded in terms of how I regard investment.
Jason?
Sure. So I have to ask before I tell the story if anyone from BlackRock is here. It's okay.
Mm-hmm.
Jason, move your mic up closer to your.
Sorry. Is anyone from BlackRock here?
Yeah.
Great. Okay. I'll tell you a story about Larry. No.
Just shout.
Fran's got me covered. Woo! Hey. I was asking about BlackRock. This is a story about Larry Fink. I think it's a good story with a happy ending. But about 5 years ago, my day job is this firm, Encourage Capital, with my partner is Adam Wolfenson, who was referenced earlier, I think, in this context, actually, of being a more integrated investor. I'm also involved in a nonprofit called the CREO Syndicate, which is a group of family offices and foundations that invest in clean and green companies, projects, et cetera. I think my colleague Rob Day is up there. He was at this meeting as well in San Francisco with BlackRock, where Larry Fink, at the end of a very long day, giving an address to a group full of people who were fully committed to investing in climate and water and things like that, said that climate was too big of an issue to take into account in investment, and so they just ignore it as a factor in their investing. And this was after talking about investing in agriculture in Africa. This has a happy ending. And he was immediately besieged after the meeting. There were a bunch of mainstream BlackRock clients there, but also a lot of folks like me, and we went up to him and said, hey, that's insane. Here's why. And it actually started a dialogue that I think resulted in a few months ago, he joined the board of the Nature Conservancy. BlackRock just hired Brian Deese, who is Obama's climate czar. There's dozens of things going on at the firm around climate and private and public markets. And I think that happened relatively quickly in the context of what we would consider kind of social movements, movement building, and activism. And I guess the point I wanted to make was that didn't happen by mistake. There was a coherent, concerted effort by a group of very intelligent investors, policymakers, and advocates that moved the head of one of the biggest or maybe biggest asset management firm in the world to think that climate wasn't relevant to climate as an important factor in making investment decisions. It happened because of things like Carbon Tracker. It happened because of things like 350.org. It happened because of places like TNC, policy, politics, philanthropy, conservation, data, investment, all. It might not look like there was a plan and there wasn't a plan, but there was a movement that is changing the way people think about capital, and that kind of A to B for Larry Fink was a story that really resonates with me.
So you asked us to think about a person who has influence. My name is Suzanne Biegel. I go by Catalyst at Large. I also wear a hat which is Senior Gender Lens Investing Advisor at Wharton Social Impact Initiative at the Wharton Business School. I'm going to speak with my Suzanne Biegel hat rather than my Wharton hat so that I can be more activist about what I'm going to say. And when I think about, I was a tech entrepreneur. I started in corporate. I built and sold with a remarkable woman partner an ed tech company. We had an exit to a multinational in the late 90s. And I've been an impact investor for 17 years and investing with a gender lens and a climate lens, really environmental lens for that whole time. And some of I can't name one person because there have been dozens and dozens of extraordinary people on whose shoulders I stand and who I get to partner with all the time. But there are a few things that are worth mentioning. Early in my sort of post-cash out, I joined the board of a foundation in Los Angeles, 2001, that was a very progressive, social justice-oriented foundation. And I started, because I was deploying my portfolio, I said, what are we doing with our investment portfolio? This is 2001. And I thought, we're one of the most active social and environmental and economic justice foundations in the country. Of course, we'd be looking at our investment portfolio. And they looked at me as, I'm sure you've all had this, many of you have had this experience. No, of course we don't. It's not about the investment portfolio, it's about the grant making. And we can't possibly look at the investment portfolio. We're too small. We don't have the expertise. It's not our fiduciary duty, all the things that come into play. And I had just joined a group called Social Venture Network, where I got to meet the godmothers and godfathers of the SRI movement who were encouraging me. And I said, why can't we be looking at this? I'm sorry for my naivete. I've just come into philanthropy, but why can't we be looking at this? And they said, well, if you want to go try and find some other people that want to have that conversation, then great, Vice Chair of the board of the foundation. And we were members of the Environmental Grantmakers Association, and Steve Viederman, who was involved, are you here, Steve? In EGA, had this listserv going that was about the other 95%. And there were, I don't know, probably 20 people on it, and I got on it. And it was basically those of us that were up for talking about how do we think about the other 95%. Fast forward, I brought in all of the people that I could find who could educate our foundation to make that change. Why women? Let me switch gears. I met a remarkable set of entrepreneurs who came to me to say, you built and sold a successful business, how do you do it? And I was coaching and mentoring and advising, and I thought it wouldn't be that, I didn't have a hard time with capital when we were raising our business. I thought it wouldn't be that hard. They were strong businesswomen, they had absolutely the right experience, they were solving important problems. What they were getting when they were going out looking for capital was, you don't have the experience. The SBA, who theoretically was giving capital to women entrepreneurs, said, come back 3 years after you've had profitable financials and you have a track record and all the things that are in the way. And so I sort of woke up about the lack of access to capital for women. And we were doing, in our foundation, we were funding grant organizing. We were funding advocacy, policy work, grassroots organizing. And I just started thinking about the linkage between organizing, grassroots organizing, and what I was doing on the investment side. And I said, I feel like, and we'll talk about this later, maybe we need to do a little bit of grassroots organizing around access to capital in a different way. And so I can talk about a lot of other people that have influenced me from New York to Nairobi, but I'll leave it there.
Well, yeah, sure. Sorry.
If you can hear me through this? Yeah. So I'm Jay Lipman, co-founder of a company called Ethic, and I think I'm the novelty millennial they've thrown on the stage. As you can see by the beard that I used to have in the photo behind me. So, we're a technology solution that essentially uses technology and data science to allow asset holders and investors to seamlessly transition their portfolios from traditional portfolios to sustainable portfolios. Most importantly, based on what you actually define as sustainability. Now, with regards to what Susan was saying, that 95% of the portfolio that has always been a little difficult to seamlessly transition over to impact and sustainability, that's where we come in. We work with the public market equity piece of that portfolio and make it very easy to give you the same essential exposure that you previously had, but to do so sustainably based on what you care about. Now, with regards to my story, I had a pretty generic kind of Wall Street experience, going in and getting funneled into a very specific esoteric function at a large bank. But what actually happened is that esoteric function, when combined with the esoteric function that my two co-founders had, actually gave us a very unique perspective and ability to create something that we knew could accelerate the transition to sustainable investing for other investors. So the reason I bring that story up and why and how we came to Ethic is that what we're seeing a lot of in this space, especially since last year, is a lot of people with experience in all these various industries, with highly esoteric experience in the food industry, in finance, in fashion, using those skill sets in the same industry with those very niche little skills and understandings they have, but doing that for good and creating business value out of it. And what's interesting is that, so we're actually an impact investment. Now, what we do is sustainable investing, but as a company, we are an impact investment. So all the conversations that have happened today about impact investing in companies and startups and the experience, like, we've just gone through it. And what's interesting is that when we went out to do our first fundraise, which thank God is, over, because it is, a tough process, we had just as much success with non-impact investors as we did with impact investors. And this is the kind of catalyst we're seeing. And I'm not sure whether, Voldemort's catalyst of the end of last year was what has made this process accelerate. But what has happened is that all these traditional investors are now very intrigued by the competitive advantage that sustainability and impact provides a company, because what we see in the capital markets is that sustainably run companies, or companies that treat their resources with respect, whether that's human or natural, will outperform versus companies that don't. And that happens in startups as well. So that's kind of my story.
Excellent. So I want to really press you all on this intersection between activism, mobilization, and I really mean mobilization. I don't mean just our own personal, individual perspectives. What relationship does, Jason, you talked about a sort of movement around climate action. There's a movement around women's equity. There's a movement around income inequality and those kind of issues. There's local and place-based things happening all over the country, all over the world. What relation does that popular mobilization have to this world of investing that you all are in?
Do you mind if I take this one?
Sure.
Sure, and I don't believe I introduced myself, which is, of course, remiss. My name is Swamy, and managing partner of a company called IoTask, which is an innovation of things company, and we consult to public sector and private sector on creating innovation ecosystems. And I also have my activist hat, which is I'm founder and board member of the Women in Technology Initiative and Center at UC Berkeley. So here's where the activism comes in. I started this center at Berkeley because we were looking at the problem of women in technology in the technology pipeline, where we're pushing in 40% of STEM graduates and women. But as you go down to the tail end of the pipeline, the attrition rates and the promotion rates are so much more egregiously off that you only get a C-suite that's about 3%, right? So we're just losing them along the way. And so, we started this saying, look, we've got to come together as a group, and we've got to deal with this systematically, because we can't have another generation of little girls going into the workforce and having to deal with the Weinsteins of this world, right? So, we've got to do something about it. So we started this process, and the first step was to put in place metrics to measure this entire pipeline. So anyway, going through, and as part of this, we encounter the problems of women entrepreneurs and women in VC. And it turns out, thanks to the recent Mr. Justin Kalbach and other such interesting incidents, that it's actually equally bad, right? So I turned around and said, well, hold on a minute. We're the UC here, and this is $100 billion of money that gets invested. Do these guys even check and do diligence on who they're putting money into? Right? Because, actually, Kalbach, I think UC LA was an anchor investor in his fund. I said, it takes one phone call. Just pick it up and call and find out just who the hell are you investing in, right? Turns out they don't do that diligence, right? They never ask the question, well, did you ever sexually harass a woman, right? So suddenly, I'm looking at it and saying, we've got billions, if not trillions of dollars of public money, my tax dollars, that are being put in so that Mr. Kalbach can have a dating service, right? That's a problem, right? And so that's kind of how you're beginning to see. So we're working with a whole bunch of LPs to show that this is actually a bad investment. In fact, Imogen and I are putting together a research paper where we're saying, basically, we're proving through mathematics that this is basically high-risk behavior, and it leads to a low quality investment. So you really need to be putting things into your investment process where you mitigate this risk as a fiduciary.
So I'd like to continue on the gender theme. So why not, right? One of the people who I also forgot to mention influenced me heavily was Anita Roddick from The Body Shop, who said, if you think you're too small, get in bed with a mosquito. I just love that quote. And she was a very active, by the way, impact investor in businesses that positively affected women, in addition to building The Body Shop. So from a movement building standpoint, there are a few things happening here. One is all of this kind of sleeping giant of the women in the Women's March, the things that are coming out on tech in Silicon Valley, the venture capital, things that are going on, the exposure in media. People are now waking up, and I've been doing this work for 10 years, and people are saying, now, 2017, what can I do, right? So it's like an overnight, now we're hot. Women are hot now. And so one of the challenges has been that there hasn't been enough, people have perceived that there hasn't been enough product. So if you want to invest, so you generate all this energy, people say, if I did want to invest, what could I do? Is it in my 401k? Is it something I can get as an ETF? Is it something that I can get with a low minimum? Or is this only a thing for millionaires and billionaires? And so one of the pieces of work I've been doing is working with people like Veris Wealth Partners and Wharton Business School on scans of what can you do in public equities with a gender lens? What can you do in private equity and venture and private debt with a gender lens? What can you do for $5,000? What can you do for $500,000? And what can you do for $50 million? Because I think we have to demystify this. We need to make it accessible to people to understand where and how they can place their capital. And I think we need to go to where people are. One thing that really makes such a huge difference in movement building is not expecting people to come to you, but go to where they are. And so if the places where people are they're at the Women's March, or they're in their college sorority, or they're in the network that they happen to be in, you name it, you need to show up in their place and say, okay, you're all gathering around Planned Parenthood and everything going on with defunding access to reproductive health and in this country. You need to then show up and say, by the way, did you realize that there are things you can invest in that are around women's health? Or you need to go and say, if there are people that are gathering around women's economic opportunity, then you need to show up and say, there are things you can invest around that. And you then need to make the connection between what do we need to be doing with our political capital, our social capital, our investment capital, and make that really explicit. And some people will do that homework on their own, but I think a lot of people just need it to be more clear. And so Ruth Shaber spoke earlier today. She is an extraordinary movement builder, and she is building this, and I'm helping, this Reproductive Health Investors Alliance. And it's basically organizing, grassroots organizing people with wealth to invest in access to reproductive health products and services. So specifically contraception and abortion services in the United States. And the work that's happening around this is looking at the connection between public policy, where do we need to be using our political capital, grant making, where can we use philanthropic and need to use philanthropic capital, either as a lever to something that could be investable later or as part of blended capital, and then where can we invest in something that is right off the bat an investable option, and helping create the business case and in the context of what is the social setting that we're in right now and the urgency that we feel, and make it more transparent what kind of solutions there are, and then organize the investors. So I think there are multiple ways to answer your question, but I think that might be just one good example.
Okay, so it's January 20th, 2021. And several years have passed. The movement that you're talking about has emerged on all fronts. What has happened? What does the world look like? What did you all do, and what did you invite the rest of the people in the room to do with you?
Yeah, so my answer kind of bridges the second and third questions. So folks are voting with their dollars in a world where the role of government in creating social and environmental value is in question. We are seeing institutional asset owners and individual asset owners tapping into the power of being an asset owner and making choices, holding companies accountable. So the net inflows to U.S. retail ESG funds from January to July of this year was $3.5 billion. That's greater than the ESG capital flows into like instruments in all of 2015, and it's close to all the capital that flowed in 2016 as well. So we're seeing capital flows to the public markets in response, certainly. We've also seen, you brought up BlackRock earlier, there was a pretty extraordinary shareholder vote around ExxonMobil, which passed with a 62% majority, holding Exxon accountable to the balance sheet implications for a 2% Celsius change in a climate. And we got to that 62% in part because BlackRock and Vanguard voted for that. So we see that there is power in both as an asset owner, there's power as an asset manager. So I think that we're seeing that really well. On the other hand, I think it's important to acknowledge that there's an extraordinary amount of income inequality in this country, and 52% of Americans don't own any stock. So we talk so much about institutional asset owners and high net worth individuals, but I'm very interested in retail investors, and I was shocked by that number. Not to mention the kind of 1% dynamic. And so while it's important for us as impact investors and as institutional investors to move our capital to be in alignment with our values, it's also important to start questioning how value gets created, and particularly how wealth gets created, and looking at areas of inclusive entrepreneurship, access to capital issues, entrepreneurship as a path to economic independence and jobs creation, and other tools of wealth creation. What I'm hoping on the eve of the next inauguration, on the policy side, that we have kind of solidified some of our wins. We had two really important sets of interpretive language in the Q4 of 2015 that bear on fiduciary duty for foundation fiduciaries and ERISA-regulated pension funds. And it has been interesting to see, whereas ERISA reform really catalyzed a lot of pension flow capital into venture capital, when that ERISA reform happened, we haven't seen, although it's still early days, as much capital being catalyzed. And so one of the roles that the Alliance does, in addition to advocating for greater level of education and policy in Washington and enabling policy environment for impact investing, is also harvesting the existing programs and wins that we have. And so to be able to kind of point to several years, 3 years hence, that some of these policy programs and decisions really catalyze capital flows so that we can kind of future-proof them on a going forward basis.
Sorry, can I just pick up something?
Sure.
That you just
Quickly,
said.
yeah.
So just on this democratization of access to capital, I just held a conference at Wharton Business School for the last 2 days on gender lens investing, and one of the remarkable leaders who spoke is a woman named Jessica Norwood, who has something called the Runway Project. And it's about democratizing access to capital so that people in the African American community and low-income communities of color can be investors in each other by buying a low bar CD product. And they are building a replicable model that can go city to city, state to state, and use a blended capital approach so that people can not only be recipients of capital, but deployers of capital, and then create wealth. And so I think part of my vision in sort of where we are by then is that these products, these things that are being incubated now, launched in pilot, the first ones that we have product across the spectrum, across every asset class, with a gender lens, with a racial diversity lens, with an environmental lens, that people have choice and they have, again, the ability to move their entire portfolios and not just think, this is something I need to do with just a little piece.
Jason, we just had global climate talks in Bonn. The "we're still in" hashtag trended for a while, and I think hundreds or thousands of cities and states sort of put their hand up at companies as well. So where's climate action in 2021?
Yeah, so I mean, maybe I'll take a little less practical view of this. I think that, and this sounds a little trite, and I don't know if Governor Patrick's still here, but certainly something he's, I think, lived is, I think we need to stop thinking about ourselves as impact investors and start thinking about ourselves as citizens and activists. And I actually think we've done a real disservice to the change we're trying to see happen in the world by siloing off this community in the way that we have. I think the CREO experience, this family office network, we've been really careful not to try to define it in a certain way so we can attract a more broad group of people politically and try to engage them in a certain way. And we've also tried to introduce kind of policy and philanthropy in a way to people who might not otherwise see the connection between what they're interested in investing and how they vote, candidates they give money to, nonprofits they're on the board of. I think we need to be way more strategic and thoughtful about how we act as individuals. So, because I did think about some of this question before, I mean, and I'll promote the things that I'm doing and ask for help on others. One is, I care a lot about conservation. I'm on the board of the Frankfurt Zoological Society. I'm really interested in how you stop fossil fuel development. I'm on the board of something called Oil Change International, which does kind of financial monkey wrenching of fossil fuel projects. Adam and I have started a group of investors who are interested in climate. I'll be honest, we've really struggled to figure out where to apply our energy and knowledge about financing climate to make a difference. I think that We Are Still in movement is a great example, like the Women's March, like Me Too, like other things. I think it's been a brilliant bottom-up effort to mobilize people around climate, but we don't really have an ask. So my ask will be for people here who are in New York, we have a lot of work to do in New York State, and I think we can organize investors to still move climate policy faster and further than it is right now. And again, I guess I want us as a community to think more about all those different parts of what we do every day, what we're doing philanthropically, what we're doing politically, who we're giving money to, what candidates we're supporting, how we're getting our friends to support other people, and then finally, investing as the final piece of the puzzle, but not as the first way we identify ourselves as, because I don't think anyone would be doing impact investing if they weren't interested in the impact. So.
Jay?
Yeah, I mean, so by 2021, and I hate to lean on this millennial thing again, but the word big data is just terrible, and we all throw it around, and it gets used at every conference, and it's the hot word of the year. But the
now
data,
you've got to say blockchain,
cybersecurity, crypto. Sorry, but the ability to actually analyze how companies actually use their resources is going to have, in my opinion, one of the biggest impacts in the next 3 years, because I love startups and I love impact and investing, and I love, we're a small company, but the reality is that most people work for a big corporation, and how those corporations actually treat their people and their natural resources is going to have one of the most dramatic effects on, where we end up in 3 years. And I'm not sure if, I'm assuming a lot of people actually probably do know this, but they probably don't. But the way that a lot of companies define a gender diverse, the way that a lot of data providers in the ESG and sustainability space that we're in define a gender diverse company is whether there is a single woman on the board.
Yeah, it's ridiculous. It's ridiculous.
That is, and then if you look at an index like the URTH, which is like a global index, something like 14% have a single woman on the board or at the CFO level or the C-suite level, 4% have female CEOs, right? We don't have the data into anything below that. The companies don't disclose it. It's so hard to get. How are they hiring women? How are they promoting them? Are women getting, are they not getting the same promotional opportunities? Are they hiring from outside? That's where we're going to work. We're trying to find the best available data sources in creative ways to see how these big corporations are actually using those human resources to impact the people that they represent. And that can be subtle things like corruption, right? Corporate corruption is something we do have data on. And if you actually look at the trends of corporate corruption, something like 90, don't quote me, it's probably not true, but something like 90 or 95% of corrupt companies are male-led. And the benefits of that corruption go to men. So these are the kind of patterns that we can use to actually accelerate the use of data, hate to use the word, to actually see how these companies are treating their human resources, mostly women, and actually get them to address that. And then going back to what Fran said, if you actually look at what happened in April with Exxon being pushed to actually include these climate disclosures by BlackRock, by Fidelity, that was a tipping point.
And so
Yeah.
We haven't talked about risk in the same way that sort of the stranded assets conversation around climate. What's our equivalent in gender of stranded assets? So what's the downside risk of not paying attention to gender? And you just mentioned a few. What's the reputational risk? What are the risks of a class action lawsuit or of a lawsuit because of sexual harassment or 20 other forms of risk? People haven't done that and made that statement. And somebody said to me at our conference yesterday, once it becomes material, then you can start to put in an investment policy statement. You can go to a pension fund and say, you need to start, we were just talking about this, you need to start paying attention to this because this is material risk. Some of these things are so dependent on the data, and they're dependent on lighting up investors to collaborate with each other, to show up and say, I'm going to push my college endowment, I'm going to push my fund manager, my wealth manager, my 401k provider, because I want product then that reflects that.
I wanted to just add one point here. It's not just the downside aspect of it, there's the upside. It turns out, innovation, and that's something I spend a lot of time with because we build innovation businesses, as it turns out diversity and innovation are highly correlated. Logically, that makes sense, right? If you have people who think differently, they'll come up with different solutions. They'll look at more aspects of the problem. So over time, companies that are more diverse are more innovative, and that's a competitive advantage.
Right.
You give up on the diversity, you lose the innovation, which, by the way, is probably why I always feel the private equity business, the venture and private equity business hasn't innovated that much. They don't come up with that many new products, right? So, why a business that is supposed to be funding innovation isn't innovating itself is a question I always ask. And I think that this impact thinking has to come both on the upside and the downside. And I think it's particularly important because we're at a very interesting point in time right now. Politically, we're going to see a shift of assets from the public sector to the private sector. Now, the public sector thinks impact. I mean, if you think about it, and I think the governor's talk actually brought that to light, it seems very intuitive, but it's true. Governments don't invest for IIR. They invest for jobs. They invest for environmental. They invest for education. They invest for impact metrics. Now, when we are going to see the shift of assets, if we do not have the impact thinking hat on, there will be a destruction in public good because you will get some strip and flip buyer who doesn't care about the impact. And that's a problem. So, kind of getting back to Jason's point, we need to think bigger. And impact shouldn't just be about the billions of dollars that are in quote-unquote impact fund. It should be a way of life in investing.
Well, thank you, Gita. I was wondering whether anybody was going to take my bait on the political angle here. And finally, we got there. So maybe the takeaway of that is that we can't rely on anybody else. It's really up to all of us and up to all of you. And I thank the panel, and I thank all of you.
Thank you.
Good job.